being here. Happy Hump Day, Wednesday at noon. Howdy, howdy, howdy. So I did see Dawn on here for a second, but it looks like maybe she had to jump off. And I don't see Brian or John.
I think Brian has some closing.
Yeah, yeah.
John's
Well,
actually on his way in. I'm
oh,
accepting him now.
nice.
Oh, and
Okay,
here's Brian. Brian's coming too.
here they come. So very cool, very cool. As usual, we'll allow our core partners to kick things off for us. That way, if they do need to get back to work, so that they don't hold up our closings, we want them to do that as quickly as possible, of course. So thank you, John, for jumping in, man. I really appreciate it.
Of course.
So I've got two or three things that I want to cover with the crew after the core partners have an opportunity to give us some updates. So, John, if you want to kick things off.
Absolutely. So, yeah, good morning, everybody. I guess good afternoon. Sorry I was late.
Yeah.
Yeah, not much new to report. Kind of as far as the market is concerned, we've seen further stability in the rates. We're still seeing government rates down in the low twos, between 2.25 and maybe 2 credit score. We've had some really good success with our Uplift program, which is the program for credit scores sub 680. We were getting hit with some loan level pricing adjusters, which is basically impact to your rate due to circumstances like low credit score. And we've had some really good pricing improvement for those people. One thing I want to mention about this program is it has income limits. So we are capped at 100% area median income, and that's dependent on the property address. So we run it through a system and see what the area median income is, and you can't be over 100% of that amount. And that is household income. So even if you have husband and wife, even if the wife is on the loan, but the husband's not, we have to look at both incomes for that income limit. So that can impact things. If someone happens to have a lower credit score, but their income's higher, it may not work out. But obviously it's better to have that program and have those limits and not have it at all. So just want to give you an update on that. Also, if any borrower that participates in that program, they have to do a budget, a monthly household budget, and they also have to take a first-time homebuyer course. Usually we just suggest the free one for VHDA they can do online. So they do have a couple hoops to jump through, but at the end of the day, it's helpful in the long run because the rate and the terms are that much better than if you just had the standard pricing without using this program. And again, it's a pilot program. They're not rolling out through the whole country. It's just in some select markets, which they've selected ours to use. So it's been a big win for us. Obviously, we have the holidays coming up. So happy Thanksgiving. We're going to have a meeting a week from today, Jason.
Sure.
Put you on the spot. Well, so Prosperity has a half day. Tim Wilson announced that they'll be closing operations down half day on Wednesday, the 25th, ahead of the holiday break for a well-deserved little rest for everybody. So I'm guessing that's going to be true throughout the industry. I'm guessing that you're going to see operations basically from Wednesday through Friday short-staffed. And even so, Monday and Tuesday, a lot of people take the advantage of having a short week to take off the entire week and spend time with their family, which at the end of the day is something that everyone needs to do and probably hasn't been doing enough of. Well, maybe they've been doing too much of it nowadays, but who knows? But not working. But yeah, so that's going to be impacting things. Go ahead.
Long and Foster's offices are closing at 1 on Wednesday.
Okay, well, there you go. So it's a company-wide. And that, I guess the only reason I'm saying that is because for loans that are closing obviously next week and then that next week after Thanksgiving, if you're trying to close, let me look at the calendar. So so we get back on the 30th, right? So if you have a closing schedule for the 30th and your loan is pretty much close by the 25th, it's going to be super hard to make that closing because if you imagine you have coming back from a weekend, closing on Monday is hard. Coming back from a holiday weekend, a 3 or 4 day weekend, and catching up on emails from operations, it's very tough to do. And that's true for settlement companies and for mortgage companies. So just be mindful of that. Be flexible as you can. We'll do everything we can and try to be proactive about that. But I just want to make you guys aware that that holiday season always impacts the operations side of things. I do feel like operations is catching up a little bit from being super behind. It's still very, very busy. I mean, we're still seeing a lot of purchase transactions rolling through. So that doesn't seem to be slowing down. Rates are still low. The refis are still out there, but again, it seemed like there was a big lump in the hose moving through about a month ago. So they're getting caught up a little bit. But there's still going to be delays out there, especially with the holidays. So other than that, we are, again, everything else is pretty much stable. So I don't know if anybody has any questions about any of that information that I gave or rates in general or lending.
That pricing program that you started off with, is that something that can be used in conjunction with a VHDA first-time buyer program in Virginia?
So good question, no. So VHDA they have their own pricing and their rates are specific to them. Almost like if you imagine like a jumbo investor, right? Like they have their own rates. They don't care what everyone else puts out there, mostly because they're usually 100% program and they can do that. So their rates are a little bit higher than what maybe a market rate would be for FHA or for a conventional loan, but they can do it, right? Because they don't really have any competition. So the cool thing about VHDA is that no matter what your credit score is, the rate's exactly the same. VHDA has no adjusters at all for credit score. So I guess it's kind of cool if you have a 620, but if you have a 780, you're like, hey, wait a minute, why am I getting the same rate as the person at a 620? That's just what they do. So VHDA rates are what they are. I always usually get that caveat when people are like, oh, I thought the rates were a little bit lower. Like when they see a rate from VHDA, it's like, yes, they are if you brought money to the table. If you did a standard FHA or VA or conventional loan, rates are a little bit lower if we use Prosperity's rates for that product. But for VHDA, again, it is what it is. Our rates are directly from VHDA. They should be the same lender to lender. There's very little wiggle room that you have with VHDA loans as far as pricing goes. And they're tougher loans, so lenders tend to even bump up the pricing a little bit. I think we are, we kind of have the direct pricing from VHDA. So short answer is it's not really necessary for VHDA because they don't have any adjusters for credit score anyways. Does that make sense?
Absolutely. Outside of VHDA, are you familiar or are you aware of any other grant programs to help buyers get into homes that maybe cover some of the down payment or some of the closing costs? I know there's a bank in Atlanta, I believe, that sometimes talks or advertises on Facebook that they have grant money available for military or first responders, that sort of thing.
So there's a bank out of Atlanta and there's other banks that partner with them, and usually it's a actual credit union or a brick and mortar bank that has a mortgage arm that has access to those programs. Not all the time. Sometimes it can be participating mortgage companies, but I do know that those funds are basically allotted at the beginning, either of the calendar year or the fiscal year, I can't remember, and then they run through them. And sometimes someone is, using those funds or is assuming they're going to use those funds, and then all of a sudden they get pulled out from underneath them because they ran out of money. I'm not saying that's always the case, but those are out there. Now we don't. So as far as that goes, we don't participate with that program specifically. When it comes to grants, otherwise, we do participate with the city localities for their usage of their first-time homebuyer grants. Now, those again, just like the other grant program, has a set amount of money and they run through them, and you have to participate through the city. So Portsmouth, Chesapeake, Norfolk, they all have programs for first-time home buyers that have grants that range from $40,000 to $3,000 depending on the program. But they are they run out of money pretty quickly. I don't know. I would have to do some research to see how the pandemic has impacted budgeting and how that's going to be, if it's going to be allotted for next year. So we do participate in those programs, but again, I don't want to say, hey, look, go out and look for this if it's not going to be available. So I'll do some research to see what's out there. Maybe try to get some basic information about those different cities, grant programs out to everybody to let you know what the stipulations are. Usually it's very low to qualify, and you hard part is usually you have to have a good amount of like money reserves for some reason. Like they want you to have a little money saved up and have really low income and have good credit. So usually that's a hard combination generally. Now it's not always the case, but it's usually pretty tough. But again, I'll get you some details, send those over to everybody so they have an idea, because it's, obviously something we would like to take advantage of, and we are participating in that. But VHDA is by far the best option for most people because they have more flexible income guidelines than the city-specific grant programs, and they're always available to use. And honestly, we kind of take it for granted, VHDA, honestly, because a lot of lenders don't participate. We've always have, and it's a good program, but a lot of places just don't want to mess with VHDA loans because they're a little quirky and heavy on the documentation side. So they take a lot of time for the processing and underwriting of them. And there's not a lot of money made with them at all. So most lenders say, I'm not going to mess with them. So if you have a client from a Quicken or a Rocket Mortgage or some other big lender, internet lender, and they're using conventional, and they're a first-time home buyer, by the way, and they're using conventional, and they say, or FHA, and they're like, oh man, they say we have to put down 3.5%. Always, keep in mind, like, hey, because those big companies, they don't participate in VHDA, so don't assume that loan officer's already tried that program. They don't use them because they don't make money off of them, so they don't want to, even mess with it. So those big companies, keep in mind that, hey, it's a good foot in the door for us. And it may not always be the best option for them, by the way. Sometimes bringing a little bit of money can help. But in this market where you're not going to get closing cost assistance, if they only had about 3% in the bank, maybe they need that 3% for closing costs, as opposed to before where they could use it just, they could put it down for the down payment and then closing costs paid for by the seller. That's not necessarily an option right now. So reducing the down payment side can be a game changer for a lot of people.
My thought is just using those programs as a lead generator, as a hook, if you will. Whether or not they qualify once, they come in, remains to be seen, but being able to promote those types of programs could be great for generating buyer leads. If we're promoting that in Portsmouth, you get your $5,000 down payment covered by the city or what have you, or Chesapeake or wherever it happens to be. Those are great taglines to put out in the marketplace and try to drum up business or drum up leads that way. So
I agree 100%.
Yeah.
Right. You don't want to falsely advertise, but
Right.
I think as agents and as lenders, we start taking for granted the fact that we can do 100% financing. We assume people know it, but honestly, it is probably the most common myth that you have to have 20% to buy a house. I mean, people think that even right now today, because that's what their parents had to do.
Right.
They've been told, and they're surprised to hear that you can buy a house with no money down if you qualify.
Mm-hmm.
With a credit score potentially down to 620. That's, again, we should make sure that we're sharing the good news with everybody, not kind of just assuming that people know. So
Exactly. Spread the news. Thanks, John. I appreciate it, man.
yeah, no problem.
Hey, Dawn, how's the insurance world?
Insurance world is fantastic, as good as it can be, all things considered, with all this craziness going on. But I just had a few things I wanted to share. First of all, I want to say hi to everybody. I love being on these calls and seeing your beautiful smiling faces. It's so refreshing. But first thing I wanted to let you know is, and I know that an email went out, but our 210 warranty, the product increased $50, the cost. No changes to coverage. Nothing's different except for the $50 increase. And that's because of cost of doing business. Because we're all stuck at home, we are using our appliances and our systems more, so they're breaking down more. and they're filing more claims. So 210 had to increase the cost of their warranty. So it went from $489 to $539 for the $189 service fee, and $589 to $639 for the $89 service fee. So if you want to ask for $650 in your contracts for warranty, that'll cover either the Cinch or the 210. And that way, you know, you guys can get your clients the best of both worlds, so to speak. I want to shout out to Marvella. Thank you for putting me in touch with your client last week. We had a super duper rush deal. He called me finally after playing phone tag about 4:30, and he needed his policy for the next day. We got it quoted, issued, and everything sent over to John in less than an hour. So
Yes, you did.
that. And Kelly, I want to thank you too, because I literally just got off the phone with your client. He is tickled with not only his realtor, but he's happy with the quote that I gave him. And Kelly, he had nothing but good things to say about you too. So shout out to both you guys. Thank you for letting me help. And I'm also working with Evelyn's client right now to get his insurance issue. He's a first-time home buyer. And I want to shout out to the ladies at Sage. I know you guys know how incredible they are, but Debbie and I were working last week to get insurance documents and warranty paperwork taken care of. I got an email from her at 10:30 at night. So she works like a fiend. So thank you guys for helping keep everything running smoothly, and shout out to Debbie Nelson. She's incredible. And Kelly is too, but this just happened to be Debbie, who was still on the computer at 10:30 at night. So I'm impressed. But that's all I have to say. Thank you guys. I know you're still out there dealing with all the craziness, and the COVID numbers are going up again. So just please be safe.
Thank you, Dawn.
Hey,
Appreciate it.
I just want to say thanks to all of our core services. They're always there for us, and sometimes at odd hours of the day and night and on weekends. So I, myself, and I'm sure everybody else, we appreciate all the hard work that all y'all do.
Truth. Thanks, Kelly.
Yeah.
Hey, Brian, how's things in your world, my friend? I see that you've had some closings going on for our office most recently. I think you're muted.
Can you hear me now?
Mhm.
Yes.
Okay, the most catchphrase of 2020 or 2020, right? Hey, so yes, we were over there yesterday. We had one with Cordell here in Kempsville, a nice mail carrier. He wanted to come here to this office. And then we had one later with Jason Everett later in the day. We had another one. I was trying to hook you up with an agent. She used to work with Long and Foster in the Kempsville office years ago. Then she went to Maryland, and she still used us up in Maryland, right? Even though she was living there. So now she came back. She signed up with EXP, but it might be a good person to, if you want to reach out to her, Jason. Also, Teresa Williams, have you talked to her?
I did, yes. I called her right after you gave me their contact information about a month or so ago. Yeah.
The reason I asked is she sent us a contract for $725,000. It's been about a week now, but I think her inventory with East West is dwindling. So
Right.
Another one just to hit on, because I am trying to actively help the brokers get some more agents.
And we don't pay you anything for that effort, right?
Yeah. So this lady, I'm going to give you her name. Her name is Jasmine Fields from EXP. She was supposed to come there last night at 4:30 and do a 5:30. Well, they never could get the buyer part done. It wasn't Prosperity. So she may come out there again, and I'll try and introduce you face to face.
Okay.
But she does do some volumes. I know you can look her up in the deep or however you do.
Are you stocking up on paydays for when we finally get back together in person?
I'm going to have to buy like crates of payday. And I know we have more to come this week. So everybody, as John said, everybody's trying to get in before, the holiday. And so it's just been that rapid close is great, John. I just did one this morning with the rapid close. they only had to sign 19 docs and they were gone.
Excellent.
So that's a really good thing because it saves them time, it saves us paper. So I love the rapid close. Has anybody gone through that rapid close? No.
No.
Well, it's just great. So anyway, so we've been busy. I think there was something put out with Boomer and Gary today about settlement agents. I don't know if you saw that email, but really they just want the borrowers in the conference room to sign. I'm trying to do my best and bring gloves and wear a mask and give them gloves. You know, so we're treading lightly, as Dawn, you said the numbers have gone up. So, you know, we're trying to be as careful, cautious, and get them all closed. So, you know, some people try to bring little kids in. We recommend they sign in the car with that. So we're trying to be creative. Now that it's getting cold outside, though, we really can't set a table outside. It'd be too cold. So we'll try and work with you all. It's really nice to come over to your office. I see you have gloves at the front desk and everything. And I love being able to offer them something to drink when they get there. You don't see that in all the offices, you know. So that's a shout out to y'all. You know, I said I don't think there's any water in there, and Jason Everett said, "Oh yeah, Stacia got us some water." So it's just a good time to come over there. I know we're coming over again. I don't know if it's tomorrow or Friday. So we'll be seeing y'all soon. So we appreciate everything that y'all do for us. Love our core services. Love getting the video on Friday evening. I mean, that's just awesome. So thank you all. I know, Kelly, we saw you earlier in the week with your closing. So it's just a great, I haven't seen the capture numbers for November yet, or October, but I know they're going to be, you know, through the roof. So thank you.
Thanks, Brian. Appreciate you jumping on with us today. Appreciate all that you guys do to get our deals closed as quickly as possible so that no one has a chance to change their mind. Thank you. Thank you.
Right. We're trying. And there's a CE class. I think, Marvella, you're going to be on there at 1:00 today on fraud, which fraud is so rampant out there. Oh my gosh, it's scary.
Very good. Thank you. All right, guys, and we'll click on over here. I got a couple of screens I want to share with you. And so we'll start with this. You may have seen this. You've probably seen this. This is rain news that just came out about a week ago. Looks like it was 9 days ago. So, and I just want to use this as an opportunity to remind you, you know, we've got people that post, you know, their upcoming or coming soon listings on social media. And so they've made this formal reminder announcement. And so I just want to share this with you guys. It's important that we don't advertise a property prior to its list date on the paperwork. We do have 2 days, however, from the list date before it has to actually go into rain. So you could use those 2 days as an opportunity to promote the property throughout your sphere of influence, or by email, or by, you know, Facebook or Instagram, or however you'd like to do that to get the word out about your listing. But you only have those 2 days. And so you probably received this email from Rain 9 days ago, or for those of you who may not have gone through Rain yet, you maybe didn't see this. And so I wanted to use this as an opportunity to remind you that in this market, we're not allowed to do coming soon listings. And so they're very particular about that. And so we've only got, you know, 2 days from the list date on the paperwork to get it into the system. And they will check, won't they, Stacia? They will ask us for the paperwork so that they can check and see what date was on that paperwork.
I got one in the mail yesterday.
They will call us out on it. So so I just want to encourage you guys to be careful where that's concerned. We don't want any obvious fines or anything like that. So cool. And then let's see, we've got this one. You guys
There-
probably should have seen this. So NAR has updated now the code of ethics. And so I think this is an important topic just to bring to your attention because I feel like after reading what I've read, you know, there are groups and organizations and committees and people out there that feel like, you know, realtors, we do subscribe to a code of ethics and a higher standard of practice. And so there are organizations out there that feel like we should be held to that same level of quality and standards of practice and ethics, even when we're not on the job, if you will. And so while previously the way the code read was in the course of doing business, you cannot discriminate against any of these protected classes. And so that has been modified now to say in the course of living your life, you cannot discriminate against any of these protected classes. And so are you guys seeing the slides right now, this Article 10 standard of practice? Okay, cool. And so you're probably familiar with what those protected classes are. You know, harassing speech, hate speech, epithets, slurs based on race, color, religion, sex, handicap, familial status, national origin, sexual orientation, or gender identity. And so really the change was to make it clear to us that even in our daily lives as individual and independent persons in a free country, we are not to violate any of the protections afforded these protected classes in the code of ethics. And so my feeling on this is probably due in large part to social media, you know, because people have a certain level of, you know, implied immunity on their personal social media profiles. And so they feel free to say things or to promote things that maybe they wouldn't in their professional lives or in their professional environment. And so my feeling is that, you know, especially with the COVID and the controversy and the election and the controversy, my feeling is that is partly what brought this to the forefront. And so just as a good reminder for you guys, don't say anything on your personal page that you wouldn't say on your professional page. And then I think we can avoid getting in trouble. And then we've got one more thing here that I want to share with you guys, and that is procuring cause. So I think you're all probably familiar with the term, but what's really interesting, and if you read this email that Nick sent out a couple of days ago, there was a PDF attached to it. And so, you know, historically, I had always thought, and I think most of us probably think that procuring cause is the person that, you know, created or generated or paid for this lead and introduced maybe this potential buyer to a property. If I went out and showed 3 properties to a particular buyer and they ended up buying one of those properties a week later with another agent, I would feel as though I was the procuring cause. That's not technically accurate. And so this article, I think, did a good job in explaining some of the nuances involved in how the Board of Realtors will actually determine the procuring cause and whether or not you are entitled to any percentage of commission. So if you didn't see this, I would encourage you to go back and look for it. I just sent it out a couple of days ago after our broker, Nick, sent it to us. So, but this does bring up a good opportunity to discuss the obligation for a buyer brokerage agreement. And so As we know, in Virginia, the law requires that prior to any substantive conversation about buying a home, we're expected to get the buyer or have the buyer sign a representation agreement. And so we've all got our own probably technique or script or dialogue that we use to present that obligation to our potential customer or client. And so the one that I've always fallen back on is, and I'll share that with you now, Mr. or Mrs. Customer, I don't know if you're aware of it, but the law in the state of Virginia requires that all real estate agents by default represent the seller's best interest of every home listed in the MLS up until we have a representation agreement with a buyer. And it's basically my permission slip to work for you and look out for your best interest and share and disclose anything that I might be able to find out about the seller's interests, maybe why they're selling. Is it a school, their kids are graduated, they're downsizing? Is it a divorce situation? Anything that can be useful to you, I can share that with you, but only after you've given me permission. And so that's how I introduce the buyer brokerage agreement. And if you guys have anything to add to that, this would be a really good time to maybe have a little discussion around that obligation, because most of the time I don't have that conversation with someone until we've probably seen a house or two, but we've not really gotten into the nuts and bolts and the details of making an offer or anything like that, or how much should I offer, or anything like that, or do you think they would take this, or would they repair this? It's those topics that I use to bring up the discussion of, I need permission to represent you in your best interest. Does anybody do anything differently? Anybody have any questions around when a substantive conversation or relationship is created?
That was going to be my question. When do you initiate that conversation about the representation agreement? But you just answered that. We,
especially in this day and age with online leads, or strangers, where our intent to help strangers realize their home selling or buying goals, it's tough. And I know that some agents are very, very particular about how they form that relationship. And when they have that conversation with their potential client, and some agents, just won't go, work with a client or work with a buyer until they've had that conversation. I've always done it a little bit differently. And so okay. So I've never, ever disqualified or prejudged someone prior to an opportunity to have that face-to-face.
It scares them if you bring it right up right away. And once you've shown them 3 or 4 houses, you should have already established a rapport with them, whether it be you're from Texas, both of y'all are from, and I'm just using my example. Because once you establish something that you have in common, then you've gotten their comfortable ability. And then that's when I kind of say, oh, by the way, we do have a buyer broker. Do you know about it? And then while we're going to properties, I talk in bits and pieces about it, so that when I set them down, they're already ready for it.
Love that. Yeah, love that. So you kind of break it up and spread it out so that it's not just here, I need you to sign this contract,
Right.
Because that's very intimidating to most people, especially if your relationship is in its infancy. You barely know each other. It can be a big turnoff.
And people are not trustworthy until they trust you.
That's right. That's right. So, anybody else have anything to add to that discussion, or are we all on the same page? Give me a thumbs up, Dudley. There we go. How about it, April? Thumbs up? Love it. Love it. Thank you so much. So, all right, guys, I want to remind you also, Mr. CG in the house, Cordell Garrett Show. Love you, man. Moxie Engage. I really, it's obviously it's a great tool. And I haven't spent probably enough time talking about it over the last couple of years that I've been here. And so this year, next year, 2021, I want to encourage everybody to get your goal in there, get your database set up some neighborhood news, set up some campaigns, because I think I mentioned this in a TGIF. I have a manager's view of the office Moxie Engage. I can't see your clients. I don't see any contact information, email address, or anything like that. But I can see the number of people that you have in your database, the number of people you have receiving neighborhood news, and the number of people that you have on any particular campaign, email campaign through Moxie. And I can also see the goal that you've set for yourself. And so what I would like to see is we all set a goal, our own individual personal goal, regardless of, if it's a lot or if it's a little. And then let me help you to, make sure that you've got enough people in your system receiving your message regularly to hopefully achieve that goal. And so this is the time of year when we talk about business planning for the next year. And so we've all got to do some thinking about where we want our business to be in 2021. And I'm more than happy to sit down and help any of you make some decisions around that goal. Like I said, it's your individual goal, but if we put them into Moxie, what's kind of cool about it, and if everybody would participate, it would be really neat, because what it does is it says, okay, April's goal is this, Jason's goal is this, Cordell's goal is this, Dudley's goal is this. And so then it tells the office, here's what your goal should look like based on the agent's goals. So we haven't had that happen in the last couple of years, maybe because I haven't talked about it enough, but I would love to see what that looks like. So I'm going to encourage you probably nonstop to get your goals into Moxie, and let me help you if you need help getting your people in a campaign or on a neighborhood news, or get enough people into the system. So there's a million ways that we can get names and phone numbers from people. My suggestion is to try to get one a day, and whether you do that standing in the supermarket line or through making a new friend on Facebook by replying to someone's comments. There's a myriad of ways that we can do that. And so I feel like if you add one name a day to your database, you will never run out of buyers and sellers. So Moxie, Procuring Cause, NAR Code of Ethics, and RAIN Advertising. Those were the notes that I had for today. Does anybody have anything they would like to add? Debbie, come on, help me out here. This is crazy. All right, guys. Well, you know that I love you and I appreciate you. Let me know how I can help. Have an awesome, awesome hump day.
Amen.
Bye.
Amen. Thank you.
Thanks.
Bye.